In this video, we're going to be discussing Bitcoin. We're going to be talking about everything that's going on with the price right now, so that way you can stay informed and understand where price is headed. If you're new to my channel, my name's Jake, and I do 2 videos a day. One video in the morning on an analysis of something, and then in the afternoon, I do a market recap video. If you like this type of content, definitely consider subscribing and leaving a like, and let's talk about exactly what's going on. So, essentially right now, Bitcoin has been in this range for 3 to 4 months, maybe 5 months. And what it's waiting for is it's waiting to get a reaction off the midpoint of this final move down. So the price you are looking to possibly see a reaction is 61,700. And if I measure it from the weekly here, actually, yeah, I would measure it from the daily. So the price you're looking to see a possible reaction is 61,700. And you're probably wondering, well, why is that significant? That doesn't make any sense. Why would the midpoint of the final move down be significant? Well, let me take you down a road called memory lane. And we're going to look at some past examples of why this level is significant. You notice this final manipulation move down, right? If I measure the midpoint of that, you can notice how price perfectly responded to that midpoint. If I go all the way back to earlier this year, if I take the midpoint of this final move down, what do you get? The reaction point. Okay, alright, now, where else has this happened? Another good example is on the NASDAQ. I go to May 31st. Check out this. What is this? Final manipulation down. The midpoint. It's the reaction point. We go over here. What is this? Final manipulation down. Where did it react? The midpoint. So you get the idea. Price loves to respond to these midpoints, and it does so almost perfectly. When it does react perfectly, it's a sign that it's going to go and reverse and take out the highs. So if price does come down and react off this midpoint, I would anticipate all of these highs to be taken. This is called low resistance liquidity. So I'm going to write this. All that means is that if price does react off this midpoint and start moving up, what is going to happen is as it approaches this highs, more and more people are going to want to enter short. And essentially, when it runs above these highs, all those people that were short are getting emotional and are panic selling, and it creates a stop run that runs past these highs. So if you get a perfect reaction off the midpoint, there's a very, very, very high probability that you will get a low resistance liquidity run to run all of these highs around the 71 to 73K range. Another reason that I think this level would be high probability is right here there's something called a fair value gap. This is a daily fair value gap. And a lot of the time price will come into a fair value gap. It'll do one of 3 things. It'll react right out of the fair value gap, right when it touches it. It'll go to the midpoint, or it will fill the fair value gap, push into a key level, and then move the opposite direction. So an example of this would be something like price coming in, filling the gap, and then boom. I think more realistically this could happen in a matter of a few days, or even sooner than that. Like it could go down like this, and then imagine this is touching that line. But that's something that could happen. And when this happens, I would anticipate price coming and running all of this low resistance liquidity. So this is something to really pay close attention to, and watch this key level very closely. You can write this down if you want. But in between 61,600 and in between 61,850. So you write down 61,700. Let me check this exact. Yeah, 61,700. So you can write that down if you want. But around that range, you're looking to see price perfectly respect that range and start moving in the opposite direction. You can see how this is like a perfect example of exactly what I'm talking about. Look at how there was a fair value gap right here. Price came in, respected it. Remember, it does one of three things. Either barely moves in and then pops out, fills it about to the midpoint and goes out, or it fills it completely and pushes into a key level and then goes out. In this case, it pushed into the key level of this midpoint of the final move down. That was the key level that it pushed into. And so you can see how the fair value gap and that midpoint of the final move down worked together to support price. And just to give you some more examples of exactly how often this stuff occurs, I don't even have any off the top of my head, but we're going to take a look and see how, like, just some totally random examples that I haven't looked at yet. One I'm already seeing right now is, look at this. This one wasn't perfect, but you can see measured from the wick, this one. So this one didn't come down and react off instantly, which is why you want to wait for a perfect reaction. But when you get a perfect reaction, then it's gonna run up and take the high. So you can see we didn't get it initially, and then we did. Boom, off the midpoint. And so once you get this perfect reaction and then a big sharp move up out of it, that's where you want to be entering, is right when you start to move up after reacting perfectly. Remember, targeting the highs. And why these highs? Because in all honesty, there's no more highs to take out, which means after we run all these highs, while price, it could easily break out and continue all the way up, but in reality, usually when you're trading, you want to have a target. A high or a low is a target for your trade, and it's a target because of how price moves. It moves by running past old highs and running past old lows. So without a target, it makes it very hard to know where you're going to take profits, and that's why these highs are an excellent place to take profits if you were to take this trade. Let's go through some more examples of this, because I want to show you how well this stuff works, right? So look at this final move up. This is on a way higher time frame, but it remains true no matter what time frame, right? This one wasn't perfect, but it was close. It was very close. And I don't have like any specific examples to show you right now. I'm just going through the one, like anything that I possibly see, right? Like here we go. There we go. This final move down off the midpoint into OTE. This range, this green range is called OTE. See how it went and perfectly tapped OTE and then moved up and worked together with probably a monthly fair value gap in here. It's exactly what you want to see. But Since I don't have any more examples off the top of my head, you saw all the examples I showed you on NASDAQ and as well as Bitcoin. This happens all the time. I have more examples actually. Let's go back to NASDAQ and we're gonna take a look at the daily time frame. Check this out. Final move up, right? Final move up. When it reacted off this range, what happened? We took out all these lows. Right? Alright, let me go over here. What was this? Final move down. Once we reacted off the midpoint, we went and ran all these highs. Oh, here's some more examples. These ones are better. What was this? Final move down. Reacted off the midpoint. Final move down. Reacted off the midpoint. What did it do? It ran all these highs. So my point is, if you see a perfect reaction off that level, that is your ideal entry point for going long, targeting all-time highs for Bitcoin. This isn't financial advice. This is just from what I've experienced. This is something that is a high probability entry point. So with that, I hope you guys found this video helpful. I hope you enjoyed this video. I have a completely free trading Discord. The link is in my bio. I'm trying to get as many people in there and create a community of people who love trading and want to learn from each other. So if you found this video helpful and you want to learn more, definitely check out my Discord and meet some cool people. And with that, I'll see you in the next video.